Welcome back, everyone. Another beautiful day of light volume holiday trading. Today we're going to dive into the price action of the market and we're going to take a look at some stock charts. The S&P 500 finished out the session up 0.72% and we are on the verge of meeting this 200-day simple moving average. Check out this teal downward trend line here. You might be asking yourself, what is that? What does that represent? Well, if we zoom out to the weekly chart, you can see this teal trend line has been pretty important throughout most of the year, and we are within about 2% from tagging it once again. The Nasdaq also had a strong finish, advancing up 1.03%. The Nasdaq had been showing relative weakness for the past couple months, so it is good to see that we are pushing out of this consolidation zone. The Russell 2000 was a big underperformer today, only finishing up 0.26% for the session, but we did get a finish above this 200-day simple moving average. Our Dow Jones was also one of our laggards, only finishing up 0.29%, but you can see into this holiday season we are fast approaching the VPOC at 34,502. Even the ARRY Innovation ETF showed some strength today. It ended up finishing up 2.86%, and we finished out above this monthly points of control and above the 5-day EMA. Now, why is this thing suddenly bottoming and reclaiming some levels? It likely had something to do with the fact that bonds were pretty strong today. Our TLT bond ETF had a decisive breakout above this monthly value area. This has been one of the themes throughout the entirety of the year. Bonds have been on their death march. I mean, just look at this stair step lower that we had throughout the summer and beyond. This is definitely a change of character that we're starting to stair step, but in the opposite direction. We do have a VPOC up here for our TLT long bond ETF. It's a 107.57. Today we did have our Fed minutes come out. They came out pretty much as you would expect. The Federal Reserve has been over communicating their message via almost daily Fed speakers. And those Fed speakers, they keep giving us the diarrhea of the mouth where they're like, we're going to keep tightening, inflation's bad. But now they've been adding in, things could get better on the inflation front. We don't want to over tighten, things like that. They're basically just talking out of both sides of their mouth. We all know what they're going to do in December, barring any big catalyst. We're going to get that 50 basis point rate hike. And those Fed meeting minutes, they're always backward looking, right? They're not forward looking. So today we ended up getting a nice reaction. After those minutes were released, the dollar continued to be weak, and you can see we closed right back towards those lows from about a week ago. Against this backdrop of the weakening dollar, we did have some strength in our Chinese technology names. Our KWEB ETF, after having some weakness over the past couple sessions with that stronger dollar, ended up reclaiming that 5-day EMA, or getting very darn close at the least. Check out Futu. This one had a really nice advance today, so it pushed out of this short-term consolidation area. Is this thing a little bit overbought? Absolutely, but it really just shows there's very good relative strength in the strongest of the strong Chinese names. I actually did take an entry in one of these Chinese equities. I got long Alibaba for $77.46. And check this out. Here we have Alibaba on TradingView. These lines over here are being generated by an indicator that I've been coding over the past couple sessions. Now, what this indicator does at the moment is you can enter in your maximum loss that you're willing to take on any stock trade. For me, that's 6%. And I want to make sure that I'm getting an attractive reward to risk on my trade. So I can set my indicator, hey, the maximum loss I'm willing to take is 6%. All I have to do is enter my entry point, and it plots out this white line, which is my entry, this red line, which is my stop loss, this blue line, which is my R1 pivot. In this particular example, that blue line is going to represent a 6% return, which is 1 times the amount of risk that I assumed on this trade. The blue line is where I've earned twice my risk, and the green line is where I've earned 3 times my risk. On most of my trades, I do want to be targeting a 2 times payout for the risk. So on this trade, I'm targeting this pink line. I also took a target today on my ARRY common shares. We closed out 50% of these for $22.72. We had paid $20.11 for this trade. I wrote here we blew through the purple 2R pivot from my max risk. Similar deal for ARRY. This was my entry point on ARRY at $20.11. I added to this trade in 2 pieces. Here's our 1R pivot and here's our 2R pivot. As soon as we hit that level, I knew, all right, I'm going to take half of this trade off, and then the other half I will let ride to see if we either get to our 3R pivot, or if this thing comes back in, which can be the case, I'm going to remove the final 50% at this white line, which is my break even. Using this indicator, it just allows you to more so systematize your trading, and you no longer have to think about like, oh man, where am I going to take my target? How do I define my risk? That sort of stuff. It really just automates it and allows you to follow the roadmap of the price action. Next thing I want to code in for this indicator is I want it to actually label the lines. That way it's just very easy to understand. For example, the white line would say entry, the red line would say stop, and then this blue line would say, something like R1 pivot. This would say R2, this would say R3. This thing is still a work in progress, and I'm going to be making it available to all members of our Pristine Capital trading community. If you're interested, you know where to go, pristinecapital.net. Check it out over this holiday season. You can get yourself a free trial. Now, it's not all sunshine and rainbows out there in the world of the markets. The VIX continues to get crushed, and now the VIX is at this 20.35 level. I actually have an alert set here at 20 for the VIX. At that point, I'm likely to enter some put options as a hedge for my portfolio. As you can see, the past couple times we've entered this range between about 18 and 22 for the VIX. Pretty soon after, there was some mean reversion and the volatility index moved higher. So I do think we're at this crucial juncture within the market where it is the holiday season, right? So there's not really many people in the office. There's not much sell pressure. Anyone that is still long volatility is just kind of getting crushed. But at the same time, as we approach that downward trend line on the S&P 500, and as we approach this 20 level on the VIX, we got to ask ourselves, how much juice does this market have left? I want to make sure I'm just following my trading plan, sticking with the process, taking my targets where I need to, taking my stops where I need to. So long as we remain disciplined, it's not going to matter. Even if the market rolls over in the early part of next year, we will be well prepared for it. With that said, tomorrow is Thanksgiving and Friday is a half day of trading. Friday is typically reserved for junior traders, degenerates, penny stock pumpers, and the like. I'm not going to be spending too much time on the desk on Friday for that half day. I'm actually going to be spending some time with family, and I highly recommend you do the same. For the most part, it's a very quiet day. You're probably just going to be sitting at the screen, bored out of your mind. With that said, hope you all have a happy, safe holiday, eat a lot of turkey, and we'll see you all next time. Make sure to like the video and subscribe to the channel. You guys are awesome.